Confirmed, NIO stock will be worth more than you think. NIO intends to compete in the rapidly growing market for electric vehicles. The electric vehicle startup presented its newest electric SUV, and new things are coming up. So welcome back to Stock Market News, you all. Well, the good news for the investors of NIO, or people who want to buy or invest in NIO, the biggest question for all of them is it a good time to buy NIO stock right now? Is NIO stock worth buying? So we've got the answers to your questions. So without taking any more of your time, let us get started right now. NIO, which was established in 2014 and has since delivered soaring sales, is sometimes referred to as the Tesla of China. Like Tesla, NIO makes luxury EVs. NIO, in contrast to Tesla, does not produce its electric vehicles, but rather works in conjunction with a state-owned auto manufacturer. Volkswagen's global sales of electric vehicles increased by 27% during the first half of the year 2022. The firm stated on July 15th that sales of all electric vehicles more than tripled to 63,500 units, with China serving as the primary driver of growth. Only considering sales in China, Volkswagen was able to surpass NIO, which delivered 50,827 electric vehicles in the first half of this year. Despite the difficulties caused by chips and other factors associated with COVID, both companies increased their sales. Once considered to be behind the times in terms of electrification, the German auto giant is now emerging as one of the leading producers of electric vehicles, although it's still behind Tesla and BYD. Volkswagen plans to achieve its goal of doubling its electric vehicle sales in China by the end of this year, riding the wave of demand for its new ID.4 electric SUVs. NIO introduced the ES7, a highly sophisticated electric vehicle, on June 15th. This vehicle can accelerate from 0 to 60 miles per hour in fewer than 4 seconds. NIO calls the ES7 its fastest SUV to date, and industry observers anticipate that it will compete against the Tesla Model Y and other electric SUVs. On the earnings call that took place on June 9th for NIO, management reportedly outlined plans for a mass-market electric vehicle in 2024. It has been rumored for a long time that the inexpensive NIO sub-brand will expand the company's addressable market, which will drive growth. The Chinese manufacturer of electric vehicles has also stated that it will begin producing its battery packs beginning in 2024. Technical analysis of the NIO stock market. After a surge of 25% in June, the price of NIO stock that is listed in the United States leveled out a bit in July. The management originally disregarded the short seller's allegations that the company had overstated its revenue from the sale of batteries. The business issued a statement announcing that it would establish a separate committee to investigate the allegations. NIO stock is currently retesting the 10-week moving average after the recent dip in price. After falling for much of this year due to concerns about the United States delisting companies and China's COVID lockdowns, the once-hot EV stock is still trading at a significant discount to its 200-day moving average and more than 57% below its 52-week high. As a consequence of this, the relative strength line for NIO stock is lower than it should be, even during a dramatic market decline. It staged a strong comeback during much of the year 2020. If the RS line's moving higher, this indicates that a stock's performing better than the S&P 500 index. In the chart that was presented, it is the blue line. The IBD composite rating for the shares is below average at 25 out of 99. The rating is a composite that takes into account both important fundamental and technical parameters. And an RS rating of 31 indicates that NIO stock has only outperformed 31% of other stocks that are included in the IBD database over the past year. The substantial buying by large investors over the past 13 weeks is reflected in NIO's accumulation distribution rating of A. As of the end of June, 878 funds owned shares. According to the data provided by the IBD Stock Checkup tool, NIO stock's not seen any consecutive quarters of increasing fund ownership. NIO lags behind its competitors when it comes to important earnings and other fundamental measures. The company's still searching for ways to earn a profit despite its youth and rapid expansion. The EPS rating for NIO stock's quite low, coming in at 8 out of 99. A company's earnings growth is compared to the earnings growth of other companies using the EPS rating. On a scale where A is the best and E is the worst, NIO has earned an SMR rating of D. The increase in a company's sales as well as its profit margins to return on equity are all factored into the SMR ranking. NIO announced on June 9th that it has significantly reduced its net losses for the first quarter, exceeding analysts' expectations. The increase in revenue of 24% was just enough to surpass projections, and EV deliveries increased by 28.5%. However, the EV delivery projection for the current quarter was disappointing, which resulted in a flurry of analysts lowering their price targets for NIO stock. Despite this, the electric vehicle manufacturer reported an increase in both production and delivery since the beginning of June. NIO CEO William Ben Li stated in an earnings press release dated June 9th that despite the volatilities of supply chain and the obstacles in vehicle delivery arising from the recent return of COVID-19, we experienced significant demand. According to predictions made by analysts polled by FactSet, NIO's losses are forecast to be more than double to 63 cents per share for the entirety of the year 2022. It's anticipated that revenues will increase by 59% for the year. They forecast that NIO will significantly cut losses to 23 cents per share in 2023, when sales will have grown by 72% thanks to the launch of new electric vehicles and a lessening of chip headwinds. NIO's electric vehicle sales more than doubled in 2021, despite the difficulties caused by the pandemic. There are currently 35 analysts tracking NIO stock, and of those, 33 have a buy rating for the stock, while only 2 have a hold rating. NIO intends to corner the luxury segment of the electric SUV and automobile market in China. Auto manufacturing behemoths in both China and the United States are vying for a share of that market. Tesla isn't the only company selling premium electric SUVs built in China to Chinese customers. General Motors, Ford, and Volkswagen all do as well. NIO CEO William Li predicts that electric vehicles would account for 90% of new automobile sales in China by the year 2030. William Li also thinks that ET7 will compete well against the Tesla Model S. He anticipates that the ET5, which competes with the Model 3 and is smaller and more reasonably priced, will increase NIO's customer base. It is believed that the ES7 will compete with the Model Y. NIO already offers the ES8, ES6, and EC6 as its 3 premium electric SUV models for sale. And NIO is extending its operations outside of China even as it increases its capacity in China. It currently offers electric vehicles only in Norway, but it plans to expand to 25 countries by 2025. Additionally, BYD and XPeng have established operations in Norway as well, while Li Auto is making preparations to launch operations elsewhere in Europe. Electric vehicle manufacturers from China are posing a threat to Western automakers on the continent, and that includes Tesla. NIO, Li Auto, and XPeng are all growing their operations in China to compete with Tesla. According to the International Energy Agency, sales of electric vehicles around the world in 2021 more than doubled from the previous year, with China serving as the driving force. The International Energy Agency predicted that battery supply chains and EV production capacity will need to expand at a high rate for this explosive growth in sales to continue beyond 2022. Nevertheless, NIO and its competitors are dealing with a shortage of semiconductors that are gradually improving and an impending lack of batteries. In general, in 5 years, NIO may have become a far more established and lucrative corporation. The decline in the stock price this year gives a good buying opportunity. This video for today is ended. We hope you enjoyed the video. If you did, please like it and share it with your friends and family. And please remember that this channel is not intended to provide financial advice, and we do not suggest investing in any firm. Hey, please subscribe to our YouTube channel where you'll see more of our outstanding videos, and we'll see you in our next video. Thank